Wall Street just had its best day in weeks. The Dow ripped over 900 points higher overnight after Trump cancelled planned strikes on Iran. Here's what that de-escalation rally means for your portfolio before the ASX opens. The S&P 500 jumped 1.75%, closing back near 7,400. The Nasdaq surged 2.54%. The Dow gained 1.86%, that's over 900 points, back above 50,800. The Russell 2000, the small-cap index, led everything with a 3% gain. And the VIX, the market's fear gauge, fell nearly 12%, easing off its 2-month highs. The story here is simple: relief. President Trump cancelled planned strikes against Iran after earlier threatening very hard attacks, and signaled a deal had been agreed in principle by several allies, including Israel. That single headline pulled the geopolitical risk premium out of the market overnight. Oil prices dropped on the news, and that eased some of the inflation anxiety that's been hanging over this market all week. The 10-year Treasury yield held steady around 4.55%, so bond markets aren't fully buying the all clear yet, but equities ran with it. The rotation here tells the story. Tech, industrials, and materials led the charge. That's a classic risk-on signal, money moving back into growth and cyclicals. On the flip side, energy, consumer staples, and real estate lagged. Energy because oil gave back its war premium, and staples and real estate because that's exactly where money had been hiding yesterday during the sell-off. When the fear trade unwinds, the safe havens are the first to give it back. So what does this mean for your money this morning? Expect the ASX 200 to open firmly higher. Somewhere in the 1 to 1.5% range looks reasonable given the size of the US move. Tech names like WiseTech, Xero, Seek, and Appen should track the Nasdaq strength directly. The flip side is energy. Woodside, Santos, Beach, and Karoon are facing a real headwind this morning, because the same de-escalation that's driving the rally is also pulling the oil price lower. On commodities, gold is sitting flat, so don't expect much movement in the gold miners. Iron ore has been firm recently, which is a tailwind for BHP, Rio, Fortescue, and Mineral Resources if that holds through the session. And the Aussie dollar bounced about 0.5% to just over 70 US cents, though it's still near 9-week lows, so the weak AUD story for exporters is largely intact. One stock to watch today: Woodside. While the broader market should open higher, Woodside is the one name that could move against the grain, a potential gap down even on a green day for the index, because oil is the one asset moving in the opposite direction to everything else this morning. 3 things for your session. First, watch whether energy actually drags on the index, or whether the broader risk-on mood is strong enough to lift even the laggards. Second, keep an eye on the Aussie dollar through the session. Any follow-through on that bounce matters for miners and exporters. And third, this de-escalation story can reverse fast. Any fresh Middle East headline today could just as quickly send this whole move into reverse, so don't get too comfortable with a gap up. If this saved you 10 minutes this morning, hit subscribe and the bell so you get this every weekday before the open. Drop a comment. Are you buying the dip in energy today, or staying away? See you tomorrow.